Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording here on Friday evening, the day after Thanksgiving. This is our post-holiday leftovers, which I love leftovers, the leftovers edition. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how was your Thanksgiving?
It was really nice. It was good.
Yep. Overeat, I hope. What it's a requirement as an
Didn't
American.
quite
You have
make that goal, but we're okay.
So today's show, we're going to do something different. We're going to review some of the major markets, not many markets, and then we're going to spend a lot of time. Sort of our This is Thanksgiving, so it's in the spirit of giving. We're going to spend a lot of time talking about how we use the squares, how we use the levels, a way you can apply it into your trading and use it to help you guys create an edge. So without any further ado, let's go. E-mini all-time high.
Right into Thanksgiving.
Yep.
Very nice. Not unexpected. Okay, so I wanted to change up a little bit how we're gonna do the show because we're not gonna do the normal one. We're gonna spend a little bit of time in how to later on towards the end. So I just wanted to hit on a couple of things, a couple of markets that are, I don't know, at important levels. It seems like a lot of these markets kind of got stuck on key levels for the last, well, few weeks really, and S&P is one of them. So let's take a look at the calendar day coming from the October low. Just to remind everybody, we're up 315 degrees from the October 22 low.
Hmm.
And we just passed up, what is this, 720, 765, 765
Hmm.
by 315. That's important. It's 720 plus 45. So
Yep.
we had it right there. And that's a good square. Plus, you pointed out another square that showed up from the April low,
Yeah.
um, which was right here. That was 135 by 225.
Yeah, that's a good one.
So I mean, they're all two of them are hitting perfectly. One from a very close low to the swing high,
Hmm.
another one from 22. Either way, you guys know the story. We've been following this and looking at the highs, and highs and lows are kind of what we do. So
Hmm.
this high has been in the making for a while. I mean, we had this high to deal with for a while, and during the election week, we took off, corrected right back down to 58.48. And we talked about how the market moves very freely between these two levels. So it's 58.48 and 60.20 to the upside. And I drew a little zone above it saying, that
Hmm.
should be about the max if the square, 50% of the square is going to sort of hold it. And of course, what happens, market goes right up there today and just parks it right in the zone. And, because it leaves you with not much to go on, right?
All right. Could go either
So
way.
it could go either way, but we can look at, like it closed above the 60.20.
Hmm.
It's in the zone, so that's kind of a 50-50. But it did make a new high, right? And
Yep.
we did reverse. It closed up, above.
Also looks like you got three drives, Barry.
Yeah, that could be three drives. You're talking about here,
One, two, three.
one, two, three, like that.
No, if you
Counting this
take,
one.
yeah, counting that one, you got one here
Uh-huh.
in October, one, pull back,
Two, three.
two,
Yeah.
three,
Maybe
and
a
this
little
is
bit
your
higher.
third.
Yeah. Yep.
Yeah.
You could
Yeah.
have three drives there. I saw that somewhere else too.
Yeah.
That could be happening.
Hmm.
So a lot of things could be happening. And so we're going to get down to the technical parts because, we don't really know
No
what's going
need
to
to
happen
speculate.
exactly. So let's get down to the 60-20. Obviously, that's the level we're going to walk into next week with. And we really want to just know one or two things. Either we're going to settle above that and start trading, or we're going to get under it and we'll have to deal with it from that point. Either we're going to consolidate, maybe stick between this 58.50, 58.45 level between this area and consolidate a bit longer, like we did here, you know,
Hmm.
and move or turn down. So whatever the case, we have to deal with the 60-20 first. And my take is my sort of the gut feeling is, I mean, we had a lot of things at this high, not just here, on a number of places. So if that really didn't turn it down with a lower high, which would be ideally what would happen,
Hmm.
And we're, like you could say almost like the market's got enough balls to get back up here again and make a new high. But we
Right.
have to sort of step back and say, all right, let's take a look and see what happens. And if you notice I was just looking at the impulse counts here on the futures
Hmm.
December contract, and we run 6 to 12 days on the upside. So
Hmm.
we've done more than six here. So I'm wondering, are we going to do 12? If we go 12 days up, meaning a 12-day trend, right?
Hmm.
Because we've done it before. And so that's possible that we do that. Not that 12 is a key number, but just, well, 11 is, but not that 12 is, but it it's there. If you do the count, you'll see 6 and 12 shows up in this cycle. So one thing is because we're closing up here, so for example, in the S&P the futures, it'll be 60.38. I mean, we're well above that. We're 60.51. So if we can hold above the 50% level, which is the 60.38 level, then we have to think there's more upside and we have to trade it like that.
Hmm.
And if you look at the Dow futures, I mean, look at that. We had this 44,300 was a key level, and
Hmm.
worst case, we could do at least according to my thesis here, right? We could break out, get up to the 50% level max and then turn down. That would be the high that we're tracking on these other indices, but it didn't.
Hmm.
We did. Yeah, we're doing an A, B, C, D, but we're well above the zone and we're above the 50% level. So to me, and then we're going to get into levels. We're going to talk about levels a little bit later. So I'm going to spend a little bit of time talking about, how to really decipher this. And it's really clean. It's not really tricky because if it's above the line, it's really above the line. Here, the open
Hmm.
and the close was above 50%. And if you think about it, that's well above 44,300, right?
Yeah.
And this is the market that was lagging back in here, I think, right?
Yeah.
Was like really lagging. Now it's easily making new highs. So obviously there's a lot of cash coming into the market.
And if we
Uh,
look at when we look at the NQs, you'll see the opposite. It was leading and now it's lagging,
Yeah,
which is
yeah,
very interesting.
right. So that's the futures. You saw the Dow here, 60/20 is for the cash. So that's it for the indices. I think you guys can take a look at the last two shows. We spend a lot more time on it. And even last Wednesday show, we talked about the ES and all of this a little bit more in detail. So you guys have all of that. And of course, we're still taking from last Tuesday, Wednesday, we're still at pretty much in the same area.
Hmm.
So that's all I have for the daily charts. But I did want to cover the 30-minute like we always do. And well, the 30-minute 59.92 was a big level we were watching. Remember we spent that one Friday. It just stuck below it, just wouldn't move. And then we came back Monday, we tested the 59.92 level really well, rallied up to this 60.37 level, which is the resistance. Looked like it was trying to get above, but it really couldn't till today.
Hmm.
And sure, it was a holiday week. Let's just say everything held pretty positive. And now we're above 60.37. And I remember saying, my comments, if we can hold above 60.37, we're probably might as well just go up and tap 60.84. So it looks like that's what's on the plate
Hmm.
for next week. And the lower level will be 60.37. So it's really important we hold above 60.37 or thereabouts. Let's just say 60.33 to 37, that area. Even if we get some kind of a spike, like this, we might get that, but we want to basically be above it. And if we can manage above this area, then I think 60.84 is the key. And if we blow through that, well, great. And we got more to go. So that's the idea there. So let's go back and visit. I wanted to visit this chart before we get
Hmm.
too far ahead. Now, I was thinking about this earlier this week, like how interesting, right? Normally, these kind of parabolic moves really blow off and then go in the opposite direction.
Hmm.
Yes, sometimes it's not always exactly like that. Sometimes it might have to, back up and go for that last gasp. and it just might get to this zone. I mean, I didn't think, when I marked this up between 61.14 and 61.60, I mean, it was really a long shot. Obviously, that's the last thing I marked on the chart. So, and 59.50 was the first level, and you can see that we spent quite a bit of time there. And last week, we talked about how not to forget, this entire time we're above 58.10, this 144 from the 22 low. We're operating, about a month, right? We're operating well above the 144. So we have to respect that and keep that in mind. No matter what other cycles are happening, we had a huge cycle hit here, and market just only kind of had a hiccup. We had like 2 weeks of a little bit of weak in the knees, but then kind of got, after the election, really kind of came back to life.
Hmm.
And this week it's hard to count it. It's kind of a light, low volume kind of a week, but nonetheless, it made a high. The weird thing is, you guys have been watching this for a while. I've had this lineup here. It's probably some kind of a Gann angle or some other geometry, came from some
Hmm.
other geometry. But anyway, this line is important. I got to start putting notes as I'm working. But anyway, the line is there, and we have the zone up here. So that would be the upside target if we push through these highs that we put in today on the
Hmm.
daily.
Hmm.
All right. So which means, I mean, we'll see that on the 30-minute first. We'll see, the 60.37 holding, and then we'll probably see the next order square holding, which would be 60.60, and then
6084 gets
60.84
captured.
gets taken out. This is the key thing.
Hmm.
If we take
Hmm.
this out, then we really set ourselves up for that next the bigger targets that we talked about, which is, like 61.75 here. If we're gonna go for a blow off, might as well just do it in style, Why
Hmm.
whimper into that?
Hmm.
And we could be getting into the one of those cycles. And I talked about the 6 and 12 day thing I noticed on the daily charts. And if that's uh, even half true, we've only had about six, so we have 7, 8. So we have about 4 more days to run, which would put us into the fifth or the sixth next
Hmm.
week. So that's possible. I'm just mentioning that, not a
Sure.
trade offer, but just to keep in mind. What else? So we talked about the weekly. Yeah, that's kind of what I have. Any thoughts?
No, I think you're right. We have to look and see if this push up holds these levels. If it does, then upside is favored. If it fails, then we can look at the false break scenarios and potential, downside moves.
Yeah, and I was thinking about the Rebel Yell cycle that came in.
Hmm.
And the deal with that is we both know Rebel Yell can sometimes give us a trend during the cycle to the
Hmm.
to the cycle low, or it could give us a V shape, you
Yep.
know. And the V shape here is a little bit hard to tell. Either this is the V, or we're going to go like this and that be the V, like an
Right.
upside down V.
Yeah, yeah.
And that's in play. So we'll have to watch that. So if that's in play and we take out the levels, so that's a sort of a sign saying, well, we have more to go. And so far today, we talked about the levels, 60.38 here. If we can manage to hold above that, obviously you want to go with that trend, and the trend is, pretty well going pretty well. We've had really good up days and
To add a little bit more intrigue, Barry, I was just
Mhm.
looking at my cycle chart.
Mhm.
Next week we have another Rebel Yell hit
Oh, went about.
on the 5th.
And I did say fifth or the sixth, didn't I?
Yes. On the 5th,
Now
which
that
is
could be that could
Thursday.
be something, that could
Yeah.
be something. So let's see how that pans out. So this
Hmm.
is all I have for the ES for now. The other markets, not a lot happened. I wanted bonds. Well, we talked about the square, and we were looking for some kind of a counter trend after that. We talked about 19 and a half. We talked about the 50% level at 122. So it looks like we're on a counter trend on the bonds for now.
Hmm.
And this, I was using a 72 square all this time, which is just fine. But since we made a high in the dollar, I was looking to see, where would this come in on a square of 90? And
Hmm.
sure enough, we did go and hit 90, and it's possible that we come down and do 90 by 360 here. That would be pretty sweet.
Yeah.
Either that or we run up and we turn down and go lower. I mean, euros. obviously, I think by now everybody knows it's going lower, but not all at once. So
Sure.
we'll just have to find where these counter trend points are. So we'll work with that. For now, we did hit the 90. And even if we didn't have the 90 here, we know the dollar hit some resistance. So we'll just keep that in mind. And let's take a quick look at the dollar. Speaking of the dollar. So this is the level we hit. We were 60 degrees up. We've been using this square off this high back in October of 23. But now that we're running up. So anyway, this is a very nice market. I mean, it's very strong, doing really well, still above the one by one.
Hmm.
And after that a run like that, I would expect it to have some kind of a correction. So I think let's let it, finish that. Makes sense, right?
Absolutely.
So at a 90, we could come 45 low to low, which would be,
That's good.
yeah, yeah, it could go 48. That's fine too. So that's something I'm watching to see if that what happens there. And 60 is fine with that. The 60 is just a harmonic of the 90. So that's
Hmm.
that. So the dollar looks like we'll get into the dollar. I want to look at the dollar weekly chart really quick.
Dollar's super important here.
Well, I let me just switch back. This is we're in Thanksgiving mode. So this is the cash. No, this is the ES um,
Weekly.
weekly continuous chart.
Hmm.
And this ABCD, did we talk about this? Yeah, we did, right? A while back.
Hmm.
Anyway, I haven't looked at this for a couple of weeks, but there is a ABCD from the 2020 low on this chart, and I probably didn't look at it because who the hell thought it's going to get way up here? So 61.37 is the target here,
Hmm.
and I had written. Uh, oh, I remember. Yeah, we did talk about that. I remember putting this on here while we were talking, and I was laughing about it. And well, see what happens. You never know.
Right.
And so anyway, I even put a zone in here. This was done a while back, maybe a month or two, maybe a month. Anyway, 6,400 is a good target up above. But more interestingly, it's this big ABCD, kind of like what we saw in Bitcoin, right? But
Hmm.
that was on the
Yeah.
weekly or monthly?
On Bitcoin? No,
That
that
was
was a daily.
that was a daily. Okay.
Yeah.
So this is a weekly, and we do have, it is approaching that, and that would balance it out. That's 61.37. You guys saw 61.38, right? Somewhere
Hmm.
else. So a lot of these numbers are lining up. Anyway, I just wanted to talk about that while we were here. Let's get back to the dollar. I wanted to go and look at the dollar a little bit deeper, but then I realized there isn't a whole lot deeper to look at because coming into this high, we already talked about it. So if you go back, if you guys want to see, go back to the October 2022 shows or late September 2022 lows. We talked about, this high coming in. But after that, we're really between that low in 21 and the high we got in 22. So we're just between those two high, that swing. And when a market's trading between the swings, there isn't a whole lot to, really, there isn't a whole lot to talk about other than to look at the sort of the fractals in here. And we just finished if you look at this, if you take the lowest low here, A, B, C, and we basically came up and tapped that. Um, Here, let me put it on. See,
Hmm.
pretty clean, right?
Yeah.
But that's not all. We saw it in the daily chart, and this is um, 2/3 of the square, which is a good support resistant level. You can see how we got stuck at that same 2/3 level a while back in 22, 21,
Hmm.
22, when it just got stuck there. So for the dollar, I think the next step is really to see how much we correct and get back on the wagon again. So as long as we hold above, let's say 105, I think dollars, I mean, dollar strong anywhere above this 104 and some change, let's say 104 and
Hmm.
a quarter, 104 and a
Hmm.
half, somewhere in there. Markets, dollars are very strong. So there's no problem with a pullback. And I think holding about 105 will be very strong. Obviously, holding about the 50% would mean the dollar's super hot, meaning it's probably going to blow this high out, and it'll probably blow
Hmm.
out the high on the daily. but it didn't. It's trading a little bit lower, and okay, so it probably mean it's still correcting, and we'll let it finish and deal with it at that point. Let me go back to the daily and look at the euro because so euro daily. Let me go look at the weekly. So the weekly, we almost dipped below the 50%, but that's just sort of the momentum, right? Carry through. And and then we reversed right on the 50% level. And
Yeah.
that came along with the dollar stopping, stalling, and the yen squaring out. We talked about that last week and I think the week before. So all of these things sort of happen together. And when you're watching these different squares from different places, it's easy to see like when some trend is about to change, or at least begin some kind of a pause and counter trend. And here looks like the main trend is established. It looks like this would be my take. Since the break out of the triangle, this was a false break. I'm guessing the real break is here. And
Hmm.
if that's the case, I mean, we'll just have to trade. Ideally, we would want to trade below 108. And so that's it. Basic, basic analysis there.
Hmm.
And those are like the key things I think I wanted to talk about. Everything else we'll cover next week, and not a whole lot happened. So I think the
Sure.
dollar was important. Um, Euro bonds we talked about. Bonds are doing fine. Only other thing would be talk about crude a little bit. Again, we're stuck in this range between 64.75 and 73.50. And like I said last time, we're really starting to narrow, and we know what that means. So just keep your powder dry and let's see what comes because it could be something big.
Yep.
And you can see how it's narrowing. You don't even have to make this up. It's just like
Yeah.
it's just easy to see.
It's
And
building up energy.
it's building up. So let's see what happens. Is it building up and just dropping through, or are you building up a false break and then back up? And remember, I kept talking about it. It'd be really good to see a false break here to clear some of these lows out. That's how we got to 61, 61. This, if we can get into this zone and then reverse, I think that would give us like the real start beginning
Sure.
versus all these false starts, kind of.
Be a nice setup.
Yeah, yeah, that would be a great setup. So that's what I have for crude. Um, Maybe we can quickly take a look at so here's the deal. I mean, it's sort of like begging for some kind of a false break down to like
Hmm.
even 62.80. I mean, false breaking here would be great. I mean, here would be ideal. So we would have to get down below 61 something, 62, right? A little bit below
Hmm.
62.
Hmm.
And the chart looks amazing. I mean, just think if we break here and run, we're basically looking at 126, right?
Yeah.
So long as we're basing here, and if you guys know how to measure triangles, we could be way up here. So
Yeah.
we'll see how all that pans out. For now, that's all I have. Um,
Okay.
what do you think about doing Nasdaq and Bitcoin and coming back to talk about the
The
levels and
squares and levels. Yeah, that's great. Let's do that.
you want to do that? Okay. Well, can't say it didn't try.
Yeah, I mean what we're seeing is I mean the first thing that I look at is I notice okay, S&P's making ES and S&P's making new highs, NQs are not, right?
And Q's
And
are
then this
triangulating.
yeah, and there's a big triangle here and you have this battle that's even now continuing around this, 208 level on the full square, 20,838. And if we draw those in, you're going to get the apex probably right there. Yeah.
Mhm.
There's your apex
Mhm.
right in there.
Yep.
So still the key level. Still concerned about the divergence with like the Dow and the S&P that are making new highs, and here we're not. So until we get this resolution of this 2838, which it was trying the last 2 days, you can see price just got a little bit below it and buyers stepped up. Um, we'll have to see. For now, this high is the high that we have to trade off of. And if we cannot get above that, then it looks like we're going to roll over and this becomes a false break high. If we can hold this and push up and make a higher high, then we got to see what else we're dealing with. These cycles will have just caused this pullback and not a major pullback. but we'll see.
Hmm.
Let's take a look at the weekly. Weekly shows something else, right? We're still below the high and still below this 21, the half square at 21,082. So we're bumping up against the ceiling here. We really want to see us get above and sit on top here to open up, the full square. And until that happens on a weekly basis, that move higher is suspect, and that's the weekly. Anything you want to add here on NQs?
No, not really. We have a triangle working, so we could come down another day. I mean, we have a little bit of space for a couple of days left.
Hmm.
And I mean, it's on the verge of breaking to the upside, being that it's right next to the trend line there. And if we break, it wouldn't be a surprise. And that means the other ones are going to probably go, take out the highs and move higher. And we'll just have to see how NASDAQ deals with all this.
Yeah, yeah. It's still a puzzle, right? It's still an open book. We don't have a super big edge here yet, so we're just waiting. And
Well,
and
yeah,
bait.
if we settle, I mean, if we can get a couple of make some air above, 838, then we probably have a little bit more to go. Like you
Yeah,
say, maybe we'll go into the fifth, sixth, which is the next Rebel Yell
right.
cycle
And,
for
and
currency.
maybe they can push up into this 2165 half square.
Yeah.
So we'll see.
I mean,
We'll
part of
see.
the fun is not knowing, right? So we'll see how that goes. But you
You
also,
get.
you have a Gartley in there probably on the 4 hour. There's an ABCD set up
Hmm.
uh, on this leg, right? The low being the A, B, and the C's the
Up in here,
yeah, up in there. So that's possible. No, yeah, that one.
right up into the half square.
Hmm.
So let's see. Let's see. We need more data to figure that out. And we'll be getting it. Every day we get more data. Let's jump over to look at Bitcoin. With Bitcoin, this is a crazy asset, and people say it's the new fang, the new money, the new gold, all this sort of thing. But look how well the geometry defines this thing.
Hmm.
It's really, really fascinating to me that, an asset that didn't exist 20 years ago or just came out 20 years ago. Now look at how it's responding to this geometry. And this week I saw it, when we failed here and started coming down, look at where the lows were.
Right on the 50%.
Right on the 50% for 2 days. It held, boom, right back up to the full
And that was a
square
big boom. I mean, covered the entire half in one day.
in one day. Yep.
Yeah.
Low to high right there. And now we got to close over. I mean, we still don't have a full bar over yet. So let's see. That's the key level this week is the 96,619.
What we do have
Uh,
is a lower high, right? After that squaring. Did you have a square up at the high?
yeah, we had a square there.
Something there, right? Yeah.
Yeah. So now we have to see, can we push to a new high? Do we fail here at this square and have a lower high? Maybe we're doing an ABCD down. Maybe it's a bigger move, but we know the levels, right? We gotta be above 96.6. If not, we're heading back to 91. But I mean, again, if you look at where we are in the move, this is still really bullish. I mean, we pulled back right here to this little formation and then have launched again. So I wouldn't be surprised to see us push up some more. There's the top, there's the half square. It's about 102.4. And as long as we clear this, that's where we're going, right up there to that half square.
Right.
So there's nothing bearish about it. The only thing is what kind of consolidation or correction do we have if this is this sort of high for this leg, what kind of correction are we going to do? As long as we're above, 73, 666, super bullish, which I know is a big range, but
Yeah.
that's the nature of this beast. Let's take a look at the monthly because we did print the monthly bar today and we are outside of the circle.
Hmm.
Earlier this past we were down in here and it looked like the circle was going to hold and the half square was going to hold. So now let's see where we print this next month. If the monthly low for December stays above 93,000, 111.5 is your next target.
Mm.
And the circle will be broken. I mean, what can happen sometimes is you ride the outside of the circle, right? Like
Yeah.
this sort of thing you could do if we have a correction and we ride the outside of the circle down to this 74. As you can see, that would still be super bullish because it's on top of this whole 7 month consolidation that we did in Bitcoin. So overall, it's very bullish. Obviously, a little bit extended when you look on a daily basis, and we're just trying to see sort of where and how we get a high that pulls back and provides us with better structure. But it was a very good week in holding that 91,000 level. Any other comments you want to make on Bitcoin?
I think it's close to a high, maybe by the end of the year. It just looks, I mean, this pattern reminds me of, I don't know if you have a weekly, but the, late 2020 to 21 move looked a lot like this.
So let's take a look at the weekly since you asked, Barry. Here's
Hmm.
the square of 52 from the higher low going into
Hmm.
the low in 2022, because this kind of looks like a false break structure. You know, we had
Hmm.
all these lows,
Hmm.
we took them out and then went. So I put it on the higher low, and it vibrates very well. Like
Hmm.
rallied up, half square, could make it,
Yep.
full square, pause, full square. Like time and price here, 104 by 104. That was pretty good, huh?
Nailed it for a few months.
Yep, got a 7 month correction there. And then look at this. Now we're at 156 by 156. So, given all the things that we've seen on the daily and the monthly, I don't think this is the high, but it certainly looks like a high.
Working
Um,
close to one. I mean, it could easily do a couple of more months under that 1/8 and still be fine.
sure, for
And
sure.
but look at the high, like back in 20, what is it, 2021 high, that little double high right there.
Hmm.
Next one, 21. Yeah, right
Here,
there.
here,
See how
right,
it high
yeah.
came in, then it kind of messed around for a little bit, false
And
break,
then
and
right,
then
and then we went.
but what I was gonna say earlier was that move from, let's say, mid like September of 2020 to the high,
Hmm.
2020 right there to the high,
Hmm.
looks very close to the high from September of 2023 to the high so far.
Yeah, similar
Because we had that
shape.
correction down there, correction
This
here.
one. Hmm.
No, no, the
It looks like the same fractal
it does. It's funny because I'm looking at the 2020 December, January of 21.
here.
If you go up, see that little consolidation right there? One, two, three, like no, the one before that, right there. So I'm
Hmm.
thinking that is,
Is this?
yeah, exactly.
Yeah.
Yeah,
Yep.
yeah. So if
Could
that's
be.
the case, we might have a couple more or whatever, but we're close.
Yeah. I mean, this
Mhm.
is a valid weekly square, 156 by 156.
Mm-hmm. Oh,
So,
definitely.
so this is a perfect transition for us because we have a valid weekly square.
Mm-hmm.
Barry, you and I talk about squares. It's second nature. We've worked with them for years. We're comfortable with them. The people that are following us may not have the same level of comfort, but they see the value of the squares and the levels that they generate. What I wanted to spend some time, sort of our Thanksgiving gift to the listeners is, and all of our followers is how do you look at these squares? Like when you're trading, like practically, we're doing the analysis here. Analysis is one thing, but to incorporate it into your trading to create an edge, how do you think about them? How do you
Mm-hmm.
use them? What's the way in which you could begin to take the levels, or if you can actually square your charts and put the squares on, put squares on your charts and effectively incorporate them into what you're currently doing in the market?
Well, that's a good question. Let's get moving.
Okay.
Can I get
Yeah, let me send it back to you.
can you see that?
Yeah, I see the
Okay.
E-mini.
So the question was, it's really about how do you transition from sort of the analysis to actually incorporating these levels and the comments into whatever the trading strategy somebody's using. Is
Right,
that
because the whole goal is to create an edge, right? And we say, listen,
yes?
with using these things, you can create an edge. How do you do that? How do you go from the
Hmm.
analysis to incorporating it to have that edge.
Okay. So I see this as a multi-part answer. And the first part is to sort of realize where things belong. So I feel like the analysis that comes through squares are more of a fundamental nature. Fundamental meaning foundational, like it's the
Hmm.
foundation.
Hmm.
And everything else will have to get built on top of that. Through that sort of lens, and you guys already know we talk about levels, we talk about the 90s and 180s, and we can use this chart for reference. That'd be okay because this is I think everybody knows the S&P. So
Yeah, 90 is sort of a foundational degree too,
yeah, we
so
just
that's a
this
good one.
and this is the chart we've been using. I'll just leave it on here
Hmm.
and just work with what's on the screen because you guys have seen it. So the thing is, a couple of things. There are some assumptions we have to make, and that is people that want to incorporate this into something has something to incorporate it into, which
Hmm.
means you have some sort of a system, either be it even as simple as trend lines or
Indicators, moving
indicators, moving
averages, something.
averages. They may see
Right,
the RSI, the whole lot, right?
right.
Anything. So whatever you have, and all the second sort of the frame we have to look at is, we're really, I mean, there's so many ways people, profit from the markets from, you can be writing stuff, you can be buying, selling options, everything, so many ways to do it. So what we do is very specific. We're kind of old fashioned, so we just basically buy and sell. That's that's all we
Hmm.
do. So when I'm talking about all of this, the lens is that, that's how I'm looking at the market.
Right. Is it a better buy or is it a better sell? Right.
Exactly. And what does it mean? And so I'll get into that a little bit. Let's see how I look at it. I mean, I really don't know until I start talking. But yeah, that's it. It's true. But
It is.
that's the idea. The idea is okay. So we talk about these levels every week, and what do you guys do with it? Like, what good is it? Is
Hmm.
it really for like mental stimulation, or can you guys actually take these levels and incorporate it right into your trading strategy and move on with it, right? And I know some of you have done that, and a lot of you haven't. And we get questions about, well, how do you use it? How do I do the squares? And so a couple of things into that. If you can do squares, well, do them. And I know we've told you that we're going to do something with TradingView, and we'll do that soon. It's just a bit of work, and
Hmm.
to do an entire segment on that, and to do it cleanly, like a actual course.
Right.
um, so we'll do that. In the meantime, if you can do the squares already, great. If you can't, and the reason we only really use the price levels, I mean, even in squares, we really only use the levels price. We talk about time only when it's important,
Hmm.
something squaring out. Otherwise, we really mainly 80% of the time we're talking about levels. So the levels you guys can just put on
Put a
your
line on your
charts.
chart.
Yeah,
Yeah.
put line on your chart, just like I have all these lines. It doesn't mean I'm trading all of them, but these are from, whatever the past stuff that we've done. So
Hmm.
you can just duplicate the lines and then you have it. That's really all you need. And you can even copy the vertical lines if you want, but it's not that much of a use unless you have all the squares and everything else to go with it. So that being said, let's take a look at, how well it really has to be how I use it because that's the only way I can talk about it.
And before you start, Barry, it also reminds me of, remember Mark Douglas said what you're trying to do with a system is create limits on something that is limitless.
Yes, we're trying to frame something.
Exactly. And so the squares and the corresponding levels give us a point of reference against which we can determine when comparing it to price what's more likely to happen.
Right. And there's a whole lot of science and geometry that goes into this chart. It looks
Right.
like simple with some a square thrown on it, but there's a lot of things happening in the background to get to this
True.
and to be able to have it correct and have all of that. So that's a whole nother story.
Right.
But the stuff that, we have to, for the stuff we're doing online, all we're doing is we're talking about the
Output.
market. Yeah, the output. We're talking about the output. We're talking about the markets using the square as a reference.
Hmm.
And so I'm talking, and then what I'm going to talk about now is let's talk about how, what's the practical side of this? I mean, all this talk is great. If it's not practical, it's really a waste of time. So let's talk about that. And to talk about that, it would really help. Let me zoom in first of all, so because we have to get to the nitty-gritty here. It would really help if you guys, I think studying market structure and basic patterns are sort of a must, you know.
Hmm.
You really should know what patterns look like, what market structure looks like, how markets move, maybe a little bit of Elliott wave, maybe a little bit of Wyckoff, a little bit of this, a little bit of that, Hurst. All of this kind of information cycle perspective helps because you need information to reference. You need information to reference what you're seeing. If somebody didn't know anything about markets, I mean, I've talked to people that know zero about markets, and I showed them a chart and said, "Well, what do you think? What do you see?" It's just blank. They don't know what they're seeing. You know what
Right.
I mean, Ben? It's it's
Hmm.
it's it's just a
Yeah.
blank chart.
Yep.
So so in order to make that info, but it's a blank chart, but with information on it. So to make that information available, you have to figure out a way to extract it and structure it. So obviously go towards your end goal, which is to profit from it. All right. So that being said, I hope this level of zoom is enough.
Hmm.
I'll put it like this. There we go. Is that pretty clear, Ben?
Yeah.
Is
Yeah.
that
It looks
okay?
good. You can see the bars clearly.
All right. So this is black and white, so bear with me. I'll try to use a pointer. Let me see here. There you go. So I'm going to assume, okay, let's say we came down, we had a downtrend from early 22. We came down into the October lows. I remember talking about all of this. I remember drawing these boxes. These are all from the past shows. If you go back and check September, October shows, all this stuff's probably there. That's where we
And you
got it.
also called out the 90 weeks that was hitting at that low. That was a 90-week low.
Yeah, I can't remember. Yeah, probably there too.
Hmm.
So let's assume that okay, this is the downtrend. And eventually we figure out that there's a price and time coming in here, and there's possibility for a reversal. And that was probably this 36.19, I think, was the one of the levels we had, and this was sort of a price false break below that.
Hmm.
Anyway, so let's assume market is down, and around here we're looking for some kind of return and some proof. So so we'll pick it up from here. Now, what are we looking for? We always talk about if so the very basic thing about trend, this is so I said earlier, what we really do is buy and sell. We don't do any of the fancy stuff, the writing spreads and all of these things. It's really simplistic. So the way we think it's also simplistic, but it has to be effective. One of the things that also you need to really define is be able to define what you mean when a market is trending. What's the definition of trending? So the way we define it is markets making higher highs and higher lows, okay? Which is a very basic one. Are there any other ways to define? Do you know any other ones, Ben?
No, that would be an
Yeah.
uptrend. And if it's making lower highs and lower lows, it's a
Right.
downtrend.
And if you guys know any other ways to define it, I'd love to hear it because there are other ways. I mean, you can define it by the MACD and say, till you cross back down, it's an uptrend. You can define it by stochastics, whatever, any indicator. So that's one way to do it. So anyway, that being said, let's take a look at this. Low comes in, then we have the next bar makes a higher high, higher low. The following bar, we have an inside day. This is right there, inside
Hmm.
bar.
Hmm.
And what do we talk about inside bar? Usually the direction that it breaks out sets the direction for the trend.
Hmm.
That's kind of how you look at it. So you have a inside bar, we break to the upside. One day, next day we begin a counter trend. So one, two, third day we make a lower low and we reverse. So probably reverse in the morning, and we have an outside reversal right there.
Hmm.
So at the close of that, close of that, what we have is a higher low. Here's a low,
Yep.
higher low.
Higher low.
Okay.
Hmm.
And we set the square at the low, and we know there's a 50% here, and we're trying to deal with that. And soon as this comes in, and I know we work with different multiple time frames just to give you guys so a little bit of background. and I post a 30-minute every day. Ben, you post a 1 hour and four
Yep.
hours, and
Hmm.
I also watch 4 hours, 30 minutes, and even lower time frames because you're trying to jockey into that position. You're trying to get like the earliest possible entry so you can minimize your risk. Um, so here I'm just going to deal with the dailies just to keep it simple. So you have the outside reversal. From here out after the outside reversal, well, that just indicates, the market just flipped around. The potential is to the upside. So from there on, somewhere during the outside day bar, or even you can say wait till the close. From then on, you got 1, 2, 3 days of trading the long side. Okay. That's pretty clear, right, Ben?
Yes.
Okay. And on the third day, we kind of have a reversal, not a reversal. We a weak close because we open and close pretty much um, right there, right close to each other. And next day we have a 1 day pullback, a 1 day counter trend. Now at this time, you're looking at the 50% of the square and wondering, is that
Are we going to fail there?
yeah, are we going to fail? Or was that the move? And now we're going to continue on further down or not? Okay, so as soon as we hit that, sure, you can start looking at the short side, but you're not completely trading because you don't have a big square out here. This just looks like another counter trend, right? It's not squaring out at the high. It's just a price level. So then the next day, price goes higher. Okay, great. Next day, inside bar, outside reversal in relation to the inside bar.
Hmm.
And we know what that means is, we could definitely continue lower from there for a couple of 3 days, whatever days it might end up being. So here, we had the outside reversal. Next day, we went a little higher, but came back down. So from then on, you're on the short side. We got 2 days of the down short side. And the day after, it reverses back up again. So now we're here. At this point, you're looking at everything. You're looking at the low. You're looking at the higher low. You can definitely draw a line from the higher low. You can draw a line from the low.
Hmm.
You could have drawn a line here. I can talk about trend lines a little bit later. I don't want to mix it all in here. So let's just go with the story. So we had a higher low. When do I check that? When do we draw a line? Soon as we get some kind of a reversal, right?
And
So,
the high gets taken out of that low bar.
high gets
Yep.
taken out. So from there on, we trade back up a couple, 3 days back into the 50% level, 1 day pullback, and we reverse and take out not just the 50%, but we also take out the old highs. So
Hmm.
what happened all through here? First of all, we put in the triangle. That's what was happening. And what do we know about triangle? That it's going to break to one side and it's probably going to continue, right?
Hmm.
That's one part of it. The other part is we were watching how higher lows were coming in. Meantime, we know there's a big square out here. We know there was a big low here. So we're basically looking for a change of trend altogether, right?
Hmm.
So that's what we're looking for. And so the mindset is we have a square here. We're looking for some type of a change in trend, and we're watching the price action to see how that's moving. So how did the levels work? Well, we had 36.19, so clearly we held above that. As long as we're holding above that, that's great. 50%, let's say, is the next level. And we broke out of the upside. Then the triangle was forming. We broke to the upside. And once we broke to the upside, you want to make sure it's holding above the 50% level. And you can
Hmm.
see I have this 39.16 drawn in here. Um, I can't remember exactly how I got it. It's a
Right.
little old, but what happened was I think we were looking for any kind of a pullback to hold above that. Clearly,
Hmm.
above 50% would be very bullish. Above that would be very,
Structurally bullish.
very bullish. So then we
Hmm.
had it two, and we ran up to this 40.38, which is another area level, if you wish, right? So
Hmm.
level to level, we came down. So if we come down one day up, 1 day down, and back up again, we took out the high of the low bar, and we're back up to the same level. Um, Kind of stalled out at the level, came back down, back up the level. All right. So you guys get the idea. Then we came back down again to test 39.16 and rallied back up. this 41.15 are really very close to the 90.
And Barry, the most important thing in relation to the squares is all that action he was talking about is above the half square.
Right. It's above the half square. And the other thing I want to mention is, I mean, if I can go like this for the entire period, but what I wanted to talk about was while this is happening, it's hard to trade both sides every day. You really need to know which direction am I really holding. So
Hmm.
here it would be the long side. I mean, if the low squared out, obviously you want to trade the long side till otherwise, right?
Hmm.
And when I say otherwise, there's a couple of traps in the way, which are some patterns like expanding triangles can come in the way. Like this was almost working out to be an expanding triangle. If you watch this, you
Hmm.
know, right there. So you have to watch for all of those things sort of materializing while you're trading. And the other thing is you get into these little stuck areas, like it happened right here in November. And when you get into those, you really have to wait and be patient till the market shows you the next, because you can't trade every day. I mean, if you only use this chart, it's difficult to trade every day. If you're using a 30 minute, sure, you can trade every day because you have a general idea which direction trade on that time level. So the time reference is important. But just looking at the daily, you're not going to trade every day. But the thing is, even if you trade one day a month, you want that to be a very high probability sort of a window that you're trading in. So that's the key idea here. If you get, as soon as you go up, like let's say here we broke out 1, 2, 3 days up. All right, 3 days up. The next day we're closing, we open and we're kind of, this looks like a very narrow day because we're inside. And then following day we take out the inside, the low of the inside bar. Well, clearly we're not trying to buy that on the way down. You know what I mean? There's
Hmm.
nothing there. So you wait to see where the support comes in. Well, it comes in this case, 39.16. All right. If it comes in, bounces, that's when you want to start looking at the long side again. So we went up for one day pullback, and then we're back up again. So how do you incorporate these one day pullbacks and coming back and congestions? So the way a good way to look at it is take whatever, let's just take an indicator system. Let's take a MACD or some kind of moving average. And what you want to do is you want to wait till it hits the level. So in this case, we hit the level. And from there, you want to see if your system produces a sell signal. And that could be on a 30 minute, it could be on a 4 hour, less than for this kind of a daily hit, going less than 30 minutes probably not a good idea because too much noise. You can get caught up in something like this. But you can take that short and you can just be on the sell side till you get to here. I mean, most less than daily time frame, less than daily meaning let's say 4 hours or less, entry systems will have you looking at the short side within this 24-hour period. So you'd want to take the sell signal, and once you get to the support, well, you definitely want to cover some and move your stops and get to break even and all those things. And this is where the trader intuition comes in. This is where the experience comes in, and this is where you really have to, like Mark Douglas talks about, this is where you can only develop as a trader is knowing how much profit you're willing to give yourself and how much risk you want to carry. So all of these things become psychological, very personal stuff. Here we're just talking about, how do you manage these levels, right? So these levels, you can see the level, this 39.16 is exactly on top of the structural support here. So when the market pulls back to that, it really pays to take some profit here, versus thinking, well, it's going to go lower. So even if you had just structural support, it's a good place to take some profit and check your stops. Why? Because you're going against the main trend, right, Ben? I mean, that's the
Yeah.
that's the idea. If
And I
you're
mean,
going
I
to
think
trade,
that's the most important thing in relation to the squares, right? The reason the square got set at the low is we we squared out, right? There was major time cycles there. So you put the square on. When you start moving in the square, you're looking for clues that, hey, that was an important spot because I'm getting higher highs, I'm getting higher lows. I've now captured the half square. When even though it's a mess in there, you're not if you look to short it, you're going counter trend, right? Because the new
yeah.
trend is up.
Hmm.
And that's the key thing to understand is that the path of least resistance is now higher. because
Exactly.
we squared out at the low, we placed a square, and we captured the half square. That's the first step. Every uptrend starts with capturing the first half square.
Hmm.
It's just like a ground game, right? You capture a little territory, consolidate, capture some more territory, consolidate. And that's how uptrends and the reverse, obviously on a downtrend, you capture territory going down. And if you look at the squares like that, like a war map, if you will, where you which side is capturing ground, it'll
Hmm.
help you.
Hmm. And this is why I said earlier, understanding a little bit of market structure, a little bit of patterns, a little bit of how markets move, a little bit of Elliott, a little bit of Hurst, this kind of stuff, Wyckoff ideas matter because then you have a sense of being able to sort of understand, oh, which cycle or which phase is the market in. So in this case, it's something similar. So if we square it out till it squares out again, you really have to sort of go with the trend. And long as there are higher lows and higher highs, the trend is intact. So that happened up until here, big, big, big drawn out day. Next day we reversed and we came below 40.38. So to me, as soon as we cut, if the market was strong, we should have ended up here somewhere, but it didn't. We broke that. So there's the note of caution, right?
Mhm.
And it's, well, the next stop was 39.16, right there. So already I know, look, we're not making higher lows and higher highs. We're starting to have something else happen. And then the next day we went through it. All right. And also up here, it was very close to a 90 by 45.
Right.
And then we came down, we took out the 39.16 and came up to the 50% line. So ideally, this should really hold. And what happened there
Another
is that
triangle.
I remember this. I remember looking at this and laugh. I remember us laughing about this because it was just chop, 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 just continuous.
But
And so
notice what it's crisscrossing. It's crisscrossing the
the 50%
50%.
level. Yeah,
And that tells you, okay, it's an important level. They're battling there. So Barry and I will talk about it. Okay, we're crisscrossing. There's nothing to do, but we got to stay alert because one side's going to win, and that's when we go.
right. And while, I mean, I'll just go back with what's on the chart. I'm not, without drawing anything. While that's happening, it's happening right on the 50%. Okay, fair enough. But we know this square here was a good low. I remember that.
Hmm.
So if you know that, sure, we could have squared out here, came back, consolidate. We'll have to see what happens. So as it's happening, you can see it held above 38, which was the next green line over here.
Hmm.
And eventually this triangle has to break. It either has to break to the downside or upside. And here we broke to the upside, very clean. And from there, if we hold above, basically hold above the triangle, I mean, it might come back for a check back, which it did 2 days
Hmm.
later. We're going to move higher. So from there, sure enough. So from that day, reversal, 1, 2, 3, 4 days, we had a trend to trade. We
Hmm.
know we're not going to sell it. We're just going to buy it. Right? And then as soon as we got to the line, 40.38, sure enough, it reversed. 1, 2 days. But here, did we go back all the way to the 50%? No, we held
Nope.
at 39.16. So what happens then? Well, you're
Boom.
looking for some kind of reversal. You got one,
Hmm.
2 days up, right at the next line. Okay, what happens? Either we're going to break or we're going to roll over and go back here and maybe even lower. But we had inside bar, took it out, theoretically took out two. And if that doesn't follow through, that's a great, way to fool people. But the thing is, by the time the close came, they bought it up. It was really like a washout, right? Took it out in
Hmm.
the morning, took it down, came back up, closed here. And so that's clean. So if you get above 40.38, we know it's going to be trading higher. Sure enough, got above 2 days, one day correction. Next day we fished around a bit, spiked down, reversed. So 1, 2, 3 days up. Now we're right on 90. Now the yellow flags are out, yellow flags flashing,
Hmm.
because now we made sort of what the S&P would do, like a normal move, right? Either
Hmm.
45 or 90. So we got up to the 90 from this low. Okay, now we have to be cautious, just because we're right there. So there's three places we're cautious, right? The original low, the floor, the middle part, and the roof of the square. So in
And the
between, we just
reason
trade the
why,
direction.
very importantly, the reason why you were cautious is we stayed under that important level, the 90.
Exactly.
We didn't
Exactly.
push through it and sit on top of it. So that
Hmm.
this is the key concept of the squares. They tell you the levels at which probabilities flip depending upon what price does.
Exactly. So yeah, we didn't break out to the upside. We got under and actually started to really look weak. We made a high, came back and made a lower high right there. Inside bar. Next day, the inside bar got taken out. So then we know we could potentially have a square here, right? We know that
Hmm.
because we're came 90. This 90 is right there. I know
Hmm.
there's a 72 calendar count or something in here. Something. There's another count in here. So
Hmm.
from there, we started trading lower, and 4150 would be the key level to watch. And once we got below that, then we started taking layer by layer. We started taking these levels out. So you trade the short side, you look for the counter trends, you continue to trade the short side. So then we went from very close to being at the top of the square all the way to the 50% level, right? So
Hmm.
50%, either it's going to hold here. It's kind of a check back on this back of this triangle, right? Triangle,
Absolutely.
breakout, come back and
Mm.
check the triangle. And now this is a great place to hold if you're bullish, technically. So
Hmm.
we held there. Again, now, one bar high, came back first for 1 day counter trend. So the bars you have to watch daily like that. That's how you have to watch. If there's a counter trend day, you want to wait till the counter trend finishes and your system gives another buy. You don't want to take the sell because systems like any lower time frames will be going, buying and selling a couple times a day, like a 5 minute chart, 30
Hmm.
minute, maybe every couple days, right? So there's a lot of movement here, but you don't want to get caught. I mean, no system's that good. That's why Fitrum systems are mostly, 50-50 at best, if you just take every signal. So the thing is, you have to have a bias so you know which side is it trending. So you want to go with the trend. So above the 50%, you want to be trading long side, and so the long side would work out. And when we get close to this 5150, all right, so what happens here? Let me just quickly cover this. We have a high, we have a low, then we go a little bit higher, then lower. So you can see the quality of the trend is not there. Now we're starting to do some kind of here it's another expanding triangle, but early on you can tell we're not making higher highs and higher lows. So as soon as you detect that, and you can tell that easily because your lower time frame, whatever system is probably, just getting all
Flipping
chopped up.
back and forth. Yep.
Yeah, exactly. And then you let it work itself out, but still now we're watching to see, well, what happens next. Are we going to take it out or are we going to stay below?
That's the key thing, right? You are watching to see at that 90-degree level, do we stay below it or can we get above it?
Exactly. And anyway, so we made higher lows and broke out, and then we went higher. We're kind of running out of time, so I'll stop it there. But that's the idea. That's kind of the depth. You want to look at the bars, bar by bar. You want to look at the swing by swing. You want to look at the intraday action, and you want to see how that squares against the price levels you have and your system. And if you can put that together, that's how you can make it more practical. At least then you have a directional availability, right?
And we'll do more of these. This is just like kind of the first in a long series that we'll do, but you use the levels generated by the squares to give you an idea of what's more probable. Below a square, it's more probable you're going down. On top of it or above it, the higher probability that you're going up. And
Yep.
that's how you can generate the edge by incorporating those levels into whatever trading program you're using. So great job, Barry. I think it's a topic we could spend days and days. We could do like a weekly seminar on this thing
Mhm.
because it's really fascinating how they work. Getting the gist of it, trusting it by watching it, put the levels on your chart, watch how price acts, see what happens when you get stuck below, see what happens when price gets stuck above, and then you'll have the confidence that you can take those setups because you know if you're above an important level, you're not going to be looking for short setups. If you're
Yep.
below an important level, you're not going to be looking for long setups.
Yep.
So the key thing when you're working with the squares, when you're above a key level, you don't want to be looking to short it. When price is below a key level, you don't want to be looking to go long. So you're eliminating sort of half of the possible things that you can do, and then you're focusing in like a laser on the trades that are supported by the fact that price is above or below that level. And I mean, I think if you simplify it, that's the key thing you want to do with the levels is No, you eliminate a certain type of trade, a certain direction of trade based on where you're sitting in relation to that level. I mean, Barry, is that a good summary? Is there anything else you want to add before we wrap it up for this post-Thanksgiving holiday show?
Yeah, well, I think that's it's a great summary, and really, it's sort of like if you want to take it to the most fundamental, it's like the simplest rule. Is it above or is it below? It's a very simple rule to watch, and it's easy to execute because we're not looking for huge, patterns or complicated patterns. We're only looking for like one price. Are we behaving above it or below it? Like a couple of good examples. I mean, here, 50%, we were below it, ended up going back to check the full square.
Yep. Yep.
Came back up. Sure, we held above it a little
Battled.
bit. Yeah,
Right.
battle, right? We held above a
Hmm.
couple of days, but really no movement, right? But then outside day came back down right to one of the levels, got above. Here's the level. We get a lot of these. Sometimes it'll jump and really stay above, give a lot of air below that, and
Hmm.
then right up to here. Did it hold above? A little bit of a battle, not really clear. Got below, 50% line, right? And below.
Yeah.
Got back up here, pull back. Now,
Stuck.
once you got above, this one was clean, right? Because right at
Yeah. Clean. Yep.
when the contracts
It
changed,
gapped. Remember, it gapped
yeah,
above.
and right above, but it held above, right? The key,
Hmm.
and well, and the rest, and now we're at the 50%. So
And
this
we're
is why
battling.
we were being cautious here, right? Obviously.
I
And
mean,
so,
even today's bar was partially under there.
yeah, in the beginning,
So,
yeah,
so
yeah,
the battle's not completely done yet.
exactly, exactly. But you
Yeah.
can see how the levels sort of keep you on the safe side, or you were talking about high probability, right? What's the
Yeah.
probability? So
Right.
yeah,
And that's the key thing. Listen,
yeah.
um, great job, Barry. Like I said, we could spend a lot of time on this topic, and we will. This will be a first in a series of many. And there's other aspects of the squares that you can incorporate and you can use, and the
Hmm.
timing, and there as he said, there's a lot that goes behind generating these levels. If you haven't done it, Barry's recommended it, and I've recommended it. There's a PDF out there on the web, GAN Made Easy by William McLaurin. It gives you the foundational knowledge behind it, and it's really really good if you're going to start working with the squares to read that because it's really really good background material.
And that
Anyway,
one,
listen,
yeah,
go
I
ahead.
was, I was just going to say that book is great if you can get a copy off of Amazon or somewhere because it comes with a lot of charts, examples that you can open up. Like, I don't know, it's like 3 by 3
Hmm.
feet, big chart rolls to study what he's talking about in the book. So it's pretty cool book to have.
Absolutely. Add it to your trading library.
Hmm.
Well, listen, if you like the work, you guys have done a great job this year. We're in the final month of the year. We've really been trying to grow the channel, and you've helped us a lot. Please subscribe, send links to your friends that trade, either experts or beginners. All are welcome, and we really appreciate the support. Great job, Barry. Happy Thanksgiving again to everybody, and we'll talk to you next week.
Thanks, Ben. Great job. And we'll see you guys next week. Hope everybody got a good rest.
Yep.
So see you guys later. Bye,
Take
Ben.
care. Bye
Bye
bye.
bye. Take care.